Stephanie, yesterday we got some great housing data, which I know you like, but I'm wondering, the fiscal cliff is upcoming. What kind of risk does that play in the housing market?
Well, you know, it's interesting. The housing index is actually down pretty substantially, double digits from their highs. And so I think there are a lot of concerns out there in general about housing. I still think it is one of the best themes in the U.S. We took some profits, right, at Weyerhaeuser and in Home Depot a couple of weeks ago. I would love to buy those stocks back if they, in fact, pull back on these fiscal cliff concerns.
Okay, we got earnings from Lowe's yesterday, which were also very solid after Home Depot reported great numbers as well. They're definitely benefiting also from Sandy outside of the housing recovery. Would you buy either of those? Which one? You did mention Home Depot. Do you like that better than Lowe's?
Well, you can own both of them. They're both going to benefit substantially from the housing cycle, right? Now, it depends on your investment time horizon and your willingness for risk, because Home Depot is really the proven executor and the great operator, and frankly, there's really almost no one better in terms of a great CEO and the execution he's done. That stock does trade at a premium because of that. Lowe's is your restructuring story. It's your turnaround story. The problem with Lowe's is that it's not going to be in a straight line in terms of getting better. So you have to be willing to deal with some of the bumps along the way, and I think as a result, you're not going to see the multiple get back towards the same multiple as Home Depot because of that very reason. They still have to prove themselves.
Okay, that makes a lot of sense. Now, Bed Bath & Beyond is one that you own sort of in the housing furnishing area. Would you look at a Williams-Sonoma or Restoration Hardware here, or even try Stanley Black & Decker again?
Yeah, we've been involved in Stanley Black & Decker, but they're actually selling off some of their housing-related operations, which is kind of curious, but I understand they're going in just a little bit different direction. I like that story. I like that management very much, and the valuation is very attractive, but they've got 30% of their exposure is in Europe, so you have that as an overhang. Now, Williams-Sonoma, it would have to come down, I think, a little bit. A Restoration Hardware would have to come down. These stocks have had nice moves recently, and see, Bed Bath & Beyond actually has not. It's actually continues to kind of go sideways, and I think that's because investors are really waiting for their earnings report in December to see if those margin concerns, which happened last quarter, are again this quarter. I think that a lot of the issues were one-time in nature, and I still like that story very much, and so that's why we are buying that stock on weakness.
And then I want to touch on the financials. That's another way you're playing the housing recovery. You own a handful of the banks, so which is your favorite on the housing recovery?
Well, so the biggest one would be Wells Fargo. They have the most exposure. The only issue there is that it does trade at a premium to the group. So I'm really very valuation oriented, and so on weakness, we're inclined to buy that one. But we'll hold certainly for the theme. And one that we have owned in the past that we have sold higher, and we are looking at again, is SunTrust. They have about 20% of their exposure is tied to mortgage origination. And they certainly will benefit, especially from the Southeast recovery. We also own, just in general, KeyBank for kind of the commercial construction market and getting a little bit easier, and that's kind of a self-help bank. They are doing an aggressive restructuring as well. So I think that's one that makes a lot of sense, particularly when it trades at below tangible book value.
Well, it's certainly a lot of different ways to play the housing recovery.
There certainly are.